Some big changes in the US housing market are afoot, and there's a lot that you need to know if you're already a real estate investor or if you're hoping to get into the industry. Now, because I'm such a proponent of acquiring income-producing real estate investment properties along with other assets, I want to share with you some new information that is shifting the way that buyers and sellers are operating right now. Now, using this information to your advantage can go a long way to ensure that your real estate ventures are both profitable and sustainable. So stick around. Hey guys, welcome back to the VIP Financial Education YouTube channel. It's me, Matthew, your cash flow coach, and we're doing another video to help you go further, faster financially. In today's episode, I want to focus on the housing market and how its slowdown affects real estate investors along with buyers and sellers. Now, recently, the technology and innovation media company called GeekWire hosted an international summit where more than 800 industry experts convened in order to share their opinions and perspectives on the economy. And what they shared at that summit confirms what real estate industry analysts have been talking about since the beginning of 2018. And that is the fact that the housing market here in the US is slowing down significantly. Now, this is happening after nearly a decade of unprecedented growth in markets like San Francisco and Portland and even here in Denver, just to name a few. Now, what makes this recent trend somewhat unremarkable to many real estate investors is its timing. I mean, for home buyers and sellers, the seasons of fall and winter are generally slower anyway, whereas spring and summer are regarded as the most active times of year. So because things do seem to be slowing down as 2018 wraps up, no one is really taking notice, but there are plenty of signs that what's happening in cities throughout America isn't just seasonal doldrums. In fact, many indications seem to be pointing to an upcoming slump in real estate, and it's a slump that we may not see coming until it hits us really hard, potentially even as early as the spring of 2019. Now, I'm a big believer in learning from people who are much more informed about certain subjects than I am. So I want to know what's really going on in the world of real estate. And that means I'm going to be listening to people like Glenn Kelman, the CEO of Redfin, because he has some things to say about this. And Redfin is a competitor to companies like Zillow as well as Opendoor, companies that are moving more and more into the realm of transacting real estate deals instead of just pairing buyers with sellers. Now, in a recent Redfin earnings call, Glenn actually remarked that he'd begun instructing his home purchasing department to slow down on buying so many homes because he fears that they won't actually be able to sell all of them come springtime. He's not alone in his estimation of where the US real estate market is going. The Wall Street Journal recently reported that growth of home prices slowed or stalled completely over the past few months, and this is expected to continue as mortgage interest rates continue to go up. And what's more, the amount of existing home sales has fallen for 6 straight months using year-over-year comparisons. Now, part of what is contributing to the US market slowdown isn't just the glut of new homes that builders have added to the market in recent years. Another contributor is the new tax law that was passed in December of 2017, which significantly reduced the tax incentives for new home buyers. Make sure you check out the video that we did on that with Nick Fortune as well. It talks all about that tax law, and I'll include a link in the description to make it easy to get to as well. But Fannie Mae chief economist Doug Duncan actually cites that the combination of rising rates and home price appreciation as the primary reason why the brakes are being put on what some have called an out-of-control housing market. Before you start wondering whether we're in for a full-blown housing crisis like the one that we saw between 2008 and 2011, don't get ahead of yourself. Even using the most pessimistic projections, what downturns we can expect from the US housing market aren't going to actually hold a candle to the average 25% drop in home values that blindsided all of us about a decade ago. And what caused the housing market crisis back then involved banking and lending practices, and a lot of those have been completely overhauled. So the slump that we're talking about experiencing next is likely going to be more of a correction that many experts are saying will be needed in order to make homes more affordable to more buyers moving forward. So what we're likely in for is more of a shift from a seller's market into a buyer's market. And USA Today recently reported that here in Denver, for instance, home buying activity has slowed to almost a crawl, making many homes more accessible to buyers that wouldn't have stood a chance just 1 or 2 years prior. And when home sales slip, houses stay on the market longer. Here in Denver, single family homes have now stayed on the market for an average of 27 days, which is up from just 19 days back in June. For yet another, more color on how the housing market slowdown is incentivizing buyers, we can actually turn our eyes to the state of Texas, where many new home builders are offering big time rebates and even perks like free vacations. And this is all in an effort to obviously incentivize new buyers, because many new home construction projects were started in times of boom instead of bust, which means that many home builders are sitting on completed inventories and they're just not being sold. In some cases, they're even dropping the prices by $100,000, are offering discounts of 6 figures or greater off the asking prices because they're just not seeing a move. And also, buyers are becoming empowered with more choices. So brokers and real estate agents are finding themselves scraping the barrel for commissions and fees that they have up until now been just raking in. What this really means for you as a real estate investor boils down to 2 main things. Number 1, it means that your money is likely to buy you more house. That's great, especially if you decide to buy during an off season like fall or winter. Secondly, it means that you can decide to buy now. And if you do, you'll likely be entering the market at a time where its near-term future is uncertain. So something like appreciation in your investment is potentially going to take longer than you might like. I always encourage our coaching members to buy real estate for cash flow purposes only, not for speculated appreciation. So if you're following that rule of thumb, it shouldn't matter what the market is doing. Now, what does the real estate market in your area seem to be doing right now? I'm curious. Are you seeing it flip from a seller's market to a buyer's market where you live as well? So tell us, where do you live? What's happening in your area? Make sure you comment below. Tell me what you're seeing. And as always, like the video. If you want us to continue to do videos regarding real estate investing, make sure you let us know by dropping that thumbs up. Become a subscriber to the channel, of course, as always, and hit that notification bell in order to be the first ones notified when we drop new videos. That's how you're going to be a winner of the contests moving throughout 2019. And this is where you're going to get the best tips and strategies straight from one of the most popular channels on YouTube that talks about credit, capital, and cash flow. Now, until we see you on the next video, make it a great day today and take care.